Hello, it's Adil bringing you a review of the US markets, predominantly the S&P 500. Okay, obviously weekend analysis from an intermarket analysis perspective, which is my forte. I wouldn't say forte, more of a student really, and someone who's trying to propagate intermarket analysis in order to get a better view, a better understanding, and a higher success rate when it comes to day trading the markets. Okay. Right, okay, so basically if you look at my FTSE 100 video, you can get a glimpse of my fundamental insight. Basically the predominant thought process is the fact that we have obviously Yellen, first of all, talking about bubbles being created in the tech sector, the biotech sector, the semicons. Okay, so that in itself should certainly ring alarm bells. Also on the weekend, as I'm reading right now, Miss Lagarde, I'll just drag this article across, Miss Lagarde warns against stock market optimism. So when central bank individuals are warning you of potential bubbles, then an individual must pay attention. Okay, even though the buy the dippers, as you can see on Friday, certainly ignored that warning. Okay, with regards to Yellen and with regards to Miss Lagarde, etc., etc., whoever it may be. Even Mr. Carney has been attempting to pop the bubble in the equity market. So the central bank members are trying to be preemptive. Okay, so when they start to be preemptive, that technically means that they are going to either stop their algos, which I personally believe and have firm conviction in that they manipulate the markets outright. They can move the markets in any direction they want. If Mr. Jim Cramer can shift the markets, shift the futures markets on a YouTube video, if you YouTube the video, if you can shift the markets with 1 million, what do you think these central bank members can do? Okay, so always think of it from that perspective. Now, let me just bring up this Jim Cramer video. Okay, manipulation. On second, YouTube. Here we go, Cramer manipulation. So what's this? 10 minutes 59 seconds. Tells you how to trade like a professional. Market meltdown. Okay, here we go. So this is Mr. Cramer telling us basically that he used to manipulate the market with as little as 1 million.
In the Wall Street Confidential, I'm Aaron Task, joined again by Jim Cramer. Jim, welcome.
Good to see you.
Thanks for being here. There's a lot of economic data out today, but I want to talk about something else first. Again,
a level of activity beforehand that could drive the futures. It doesn't take much money. Similarly, if I were long and I would want to make things a little bit rosy, I would go in and take a bunch of stocks and make sure that they're higher. And maybe commit $5 million in capital to do it, and I could affect it. What you're seeing now is it probably is bigger market now. Maybe you need $10 million in capital to knock this stuff down, but it's a fun game and it's a lucrative game, and you can move it up and then fade it. That's often creates a very negative feel. So let's say you take a longer term view intraday, and you say, listen, I'm going to boost the futures, and then when the real sellers come in, real market comes in, they're going to knock it down. That's going to create a negative view. That's a strategy very worth doing when you're valued on a day-to-day basis. And I would encourage anyone who's in the hedge fund game to do it because it's legal,
right?
And it is a very quick way to make money and very satisfying.
Okay. Well,
by the way, no one else in the world would ever admit that, but I can care.
That's right, and you can say that here.
I can't. I'm not going to say it on TV.
Well, on a related note, there's so many more hedge funds today than when you were.
Right.
Okay, so basically this chap explains in a nutshell how he would manipulate the markets with a small amount of money. Okay, and he said it's very lucrative and it's legal. Okay, so I think that puts that argument to bed. Okay, whether or not the stock market's manipulated. Okay, so this is basically what they attempt to do. So Friday was a classical example. You had geopolitical risk from Israel, Palestine, Ukraine, Iraq, etc., etc., and yet the stock markets rallied and ignored everything. Okay, so as you can see, the S&P had an inside day, but they basically squashed every short there was. Now you can blame that on option X, you can blame it whatever you want. Okay, they wanted to knock out all the stops, etc., etc. I mean, it's just hilarious. Literally, it's hilarious. I mean, it continued to go higher without any news whatsoever, even with Mr. Obama's speech stating that it was the Russian rebels who shot the plane down. Absolutely, I mean, it just really defies logic. Okay, but that's a stock market for you. You see, they always say, there's a saying, you know, the stock market. Well, you can stock market will always remain irrational, logical longer than you can remain solvent. Okay, so it's very, very important, very, very important. Excuse me. Okay, so it's very, very important for you to focus from that aspect. Okay, so it's all part and parcel of this market, folks. Okay, they always say when all the experts and forecasts agree something else is going to happen, don't call the market a bull or a bear, because switch just ride a trend. Okay, so it's just basically all part and parcel of trading, folks. Okay, so stock markets can remain irrational, logical longer than you can remain solvent. Okay, so just bear that in mind. Remember that quote: keep good money management, good risk management, and always live to fight another day. Okay, so let's have a look at these markets then. So we already know with regards to from a fundamental perspective, we have QE in full effect. We have QE in full effect. Okay, and Miss Yellen talking about bubbles. We have geopolitics. So basically, that leads me to the conclusion that the markets will certainly move lower come Monday. Okay, so I remain a bear, and this is my case. Okay, so I've explained the fundamental backdrop. Let's try and look at it from a intermarket analysis perspective and a fundamental analysis perspective. From an intermarket analysis perspective, we know the FTSE 100 is bearish, which I've already explained, and I've put forward my arguments of why. Okay, so if the FTSE itself is weak, that means Europe is weak. If Europe is weak, that means that the US markets will be weak. So that's just looking at it from an intermarket analysis perspective. Now let's look at the S&P and let's see exactly where it's going. So S&P 500, there's a potential here for H&S after this double top intraday, not intraday, on a daily chart, sorry. So 1985, 1983 double top scenario. We have this right shoulder being filled potentially here if this inside bar can hold. If price action remains below 1980 and 1985, then the bears certainly remain in control, and this is a rising contracting wedge pattern will certainly kick in and be activated. Okay, so just bear that in mind, folks. Okay, from a trading perspective. Now let's have a look at the Russell, because Russell is generally the leader for the S&P 500. What do we notice there? You have an H&S formation. Obviously, we've come up and we've closed the gap. Okay, you've got the 200 MA below. You've got this key trend line, obviously, that's in effect. So we need to touch and hit. Okay, so we've retested the neckline of the H&S. What happens when we generally tend to retest the neckline? We go south. The only obstacle here is that unfilled gap. Okay, so whether or not Miss Yellen's algos will pump the Russell, which has been the weakest link out of every index, to go and close that gap, that's the question. Okay, they could the algos could go into override and close the gap, which in turn will cause the H&S formation to fail, because they love to create H&S formations, or love to kill H&S formations, because they love triggering short squeezes. Okay, because a short squeeze basically is QE. Rather than pumping excess money and forcing the equity markets higher, you can just literally create short squeezes and force this market higher. Again, look in John Murphy's book. He does explain that, how the Federal Reserve hired several technical analysts to specifically focus on triggering short squeezes and H&S formations. This is not this isn't just conjecture, folks. This is reality. So certainly have a look at Mr. Murphy's book. You'll see it in there. Okay, so this is where we are. Okay, so we're fighting central banks. We're trying to understand how central banks are operating. That's all day trading is now. Day trading isn't understanding what the other individual is buying anymore. It's all about what central banks are doing. So getting the mindset of what the central banks are doing. Understand how the manipulators are trading, or how they're thinking and what they want the market to do, and you'll be a successful day trader. Okay, don't get me wrong, I get it wrong as well. I'm human. Okay, I'm not infallible. Sometimes I can misread the market because I'm an investor, because I'm a trader. It's my natural disposition to think like an investor and a trader. But when I go divorce myself to the thinking of a central banker, that's when I get myself into trouble. So again, strongly encourage you to start thinking like a central banker. It'll make trading easy for you. Okay, so back to the US market. So okay, so we've concluded that the inside bar on the S&P 500 is active. A rising contracting wedge pattern is bearish. Double top 1985, and we have a H&S formation of Russell, which is generally the leader for the, or small cap for a guidance for the S&P 500. So therefore indicating bearish. Okay. Now let's have a look at the Dow now. The Dow is very interesting. Okay, we did have a bullish engulfing candle on the Dow Transportation Index. That's mainly That's mainly due to the fact that oil prices obviously are lower. Okay, now oil prices, ask yourself, are oil prices going to remain lower? No, they're not. Okay, why? Because of geopolitics. So if the Dow transports are sensitive to the movement in the oil price, okay, because if you look at this is a rally higher, and if you look at a chart of the oil price, let's bring up oil. Here we go. Obviously you've had this move lower, which has obviously led to the Dow transports rising. Now we've had a potential move lower, obviously that caused the Dow transports to sell off temporarily. Now we have this pattern here. So a lot of individuals are relating to a potential HNS. I disagree. Okay, I expect us to go back and test the 107 level, if not higher. Okay, due to the geopolitical concerns that are in the market at this very moment in time. Okay, the Israelis and the Hamas are not going to call a truce. The conflict will more than likely escalate onto other borders, and the Ukraine-Russian situation, given the fact that pro-Russian rebels have shot it down, I can't see Putin backing down at all. And the ISIS in Iraq, on this weekend alone, there's an article how they're gaining ground. So I don't see how that's going to subside, and that will remain. Okay, so the pressure on oil will certainly remain. Okay, so if that's the case, then the Dow transports are certainly going to come under pressure. This bullish channel will certainly come under threat. Okay, so keep an eye on this bullish channel. Let's have a look at the Dow, given the fact that's the Dow transportation average. So if you look at the Dow, okay, so the Dow is an inside bar and rising contracting wedge pattern. As we all know from a technical pattern, that's bearish. Okay, it's a bearish pattern. So is that bullish? No, it's not. So if the Dow is not, obviously Dow, even though it's led by the Dow transports, you know the Dow transports is under pressure due to geopolitics, due to higher oil prices going forward, then this will certainly come under pressure as well. Okay, that's basically the conclusion there. Now let's have a look at the semicons and the Nasdaq. Let's have a look at the Nasdaq first of all. The Nasdaq itself, obviously this uptrend continues. It tends to defy gravity. But what are the components, or what are its leaders doing? This is a laggard. Let's see what the leaders are doing. So semiconductors, as we know, has broken this double top. It's put in a double top. It's broken this key trend line. Okay, inside bar, bear flag situation, wants to move lower, therefore bias remains down. Although you do have an unfilled gap above, this will always remain, so this is going to be interesting, whether or not Miss Yellen's algos are going to close that gap. Okay, that's going to be very interesting. We need an outside bar first before we go ahead and close the gap, and the Nasdaq needs to make a new high. Again, that scenario right now, given the fact that geopolitics are dominating, very, very unlikely. So let's have a look at the biotech sector now. The biotech stocks, as we know, have broken the bullish channel, have an HNS formation. HNS formation, target remains active. So you've got a head of around the 266. You've got a neckline around the 252. We still need to go lower and hit the target. So 265, 266, 252. You're looking at a 14-point move, so you're looking at the 238 level. So you're looking at the 200 MA. So certainly this is a retracement, so a dead cat bounce, and then down we go, retest into the neckline, sell off. Okay. So if the semicons and the Nasdaq are both weak, technically on the daily chart, what do you think will happen to the Nasdaq? It will go south, folks. Okay. So Dow transports, Dow south, S&P 500 south, Nasdaq, biotechs, and semicons south. So what do you think the next move is going to be? Let's have a look at the European markets. Let's see if we can gauge something from there, because the DAX and the Nasdaq are quite heavily correlated. Okay, what do you see there? It's a breakdown. We're in at lower lows, lower highs. Okay, we've closed the gap below. We're putting a bottoming tail. Will that continue? No, it won't. Okay, let's have a look at the Euro stocks. See if we can gain a insight from there. Daily chart, as you can see. Let's have a look at it from a longer term perspective. You have a HNS formation that's been triggered. The target still potentially almost there. 3120 still needs to be hit. But if you look at it from a larger term perspective, what do you notice here? HNS, HNS, inner HNS. Okay, so this is all your right shoulder here. So what does that mean? We're going lower. We're going to test this key trend line down here, 3050. Why Mr. Draghi is not doing QE? That's certainly a catalyst. Economic data is relatively weak. Down we go. This is one big bear flag. Down we go. So situation is not looking good. Okay, so from an intermarket analysis perspective, down we go. From a single market perspective, i.e. the US market, European market, UK market, all looking bearish. From a fundamental perspective, bearish. given the fact that QE is coming to an end, given the fact that we've got rate rise concerns in the UK, given the fact that we've got QE or tapering concerns in the US, given the fact that European Union, there's no QE coming, even though Mr. Draghi keeps dangling the carrot. Adding the fact that you've got geopolitics and obviously Russia now with regards to Russian sanctions and the MICEX being down almost 2%, absolutely getting hammered and clobbered. That's basically the situation, folks. Okay, so from my perspective, we definitely are bearish. We definitely are looking to go lower, and I'll maintain that bias come Monday. Again, like I said, I'm open to multiple views. If the markets or Asian markets show resilience, ignore the geopolitical standoff. That obviously will then trigger a potential move in the opposite direction, and I'll be more than happy, more than willing to change my bias. Okay, so that's basically what I'll be doing. Okay, so risk on, risk off, wax on, wax off. Wish you the best for next week's trading. Keep analyzing, remain sharp. Adios.